What's up everyone, it's Cameron here from Money Rebel with another investing video. Today I want to talk about why I think that Ethereum will outperform Bitcoin in the short to medium term. Now, don't get me wrong, I'm not saying that Bitcoin is going to crash. I still think it'll be an okay investment, probably a pretty good one when compared to investing in some of the stock indices like the S&P 500 or the NASDAQ. I'm just saying that looking at the risk-reward ratio of investing in Bitcoin over Ethereum, I think Ethereum is the better bet. And I'll unpack why that is in this video in a moment. Before I do that, I do want to point out that I am not a financial advisor, so do not take any of this babble that comes out of my mouth as financial advice. This video is for education and entertainment purposes only. I do have a bit of a nose for a good investment, and my own personal stock portfolio has performed in the high 30 percentiles return annually over the last 4 years, which, would put me up there with some of the best fund managers in the world. But nonetheless, I'm not a financial advisor, and I am, at the end of the day, just a bloke in a t-shirt talking to a camera. Please do your own research before buying crypto, and please, whatever you do, do not borrow money to invest in crypto. Only invest in what you can afford to lose, and what I mean by that is don't invest in anything that you need to, say, live on in the short to medium term. Right, all of that out of the way, let's get on to the topic at hand. I prepared all these little notes down here so I do not lose my way in what I want to say. So starting off, why I think that Ethereum is a better risk-reward investment than Bitcoin over the medium to long term is purely down to the fact that Bitcoin is great, but it's kind of a one-trick pony. It just really has one thing going for it, whereas Ethereum has got quite a lot of other stuff going for it in terms of its utility. So let me explain that. Bitcoin is people mainly buy Bitcoin because they think it's a store of value, and they're speculating that the price will go up. So Bitcoin's over here going, ooh, look at me, I'm Bitcoin. I'm a great store of value. Invest in me. The price will probably go up and you can make some money. So everyone's like, oh, let's buy that. That's great. Okay, good. Okay, not bad. If the price continues to go up, then great. But there's kind of like not a lot holding that price up apart from that speculation around it being a store of value. That narrative could, of course, change, which is a bit of a risk. Ethereum, on the other hand, is also quite a good store of value. Its price is appreciated. You would have done pretty about the same if you'd invested in Ethereum over Bitcoin over the last few years. You might have done even a little bit better if you bought it at the right time. But it's returning a similar return as Bitcoin if you look at it over a long period of time. So not only do you have all of that, but you also have this plethora of applications that use Ethereum as the settlement layer. Basically, what I'm saying is that there's this massive utility aspect to Ethereum which helps support its price. So for example, you've got dApps, you've got DeFi. DeFi is decentralized finance, which is the ability to be able to lend, borrow, trade, sell, much like regular finance, but all on the blockchain. Then you've got NFTs, which is like basically collectibles or unique tokens which enable issuing of collectibles like art, blockchain domains, music, and then you've got stable coins. So Visa's just released its own stable coin which uses, guess what, Ethereum as the settlement layer, and there's loads of other institutions and governments that are looking to issue their own stable coins on the Ethereum network. Basically, to summarize, the point I'm making is that Bitcoin, one-trick pony, Ethereum, multi-trick pony. It has more than just speculation and this idea or this idea that people brought into that Bitcoin is a great store of value, but it has all this utility that just helps support the price. Therefore, Bitcoin is actually the more risky play in my view, because if, and I'm not saying this is going to happen, but if, hypothetically, if some of these other altcoins start to be a better store of value than Bitcoin, then that could be big problems for Bitcoin. Because if its only play is that it's a great store of value, and then if people start looking over and going, well, Ethereum's outperforming Bitcoin, maybe this is a better store of value. Or if it's not Ethereum, maybe one of the other altcoins like Cardano or Polkadot. If that starts to happen, then people might go, oh, maybe I don't need to hold this Bitcoin and I'll be better off buying these other coins. And if that happens, there could be a bit of a rush for the doors, and that could be really bad news for Bitcoin. But I'm not saying this is going to happen, but I'm just highlighting a massive risk with Bitcoin that is not talked about at all, and that it really has just this one thing going for it, and this one thing could quite easily be replicated by some other coin, and that, a great store of value. This is less of a problem for Ethereum, primarily because it just has this plethora of use case, or this demand for its coins, apart from just speculation and store of value. That's why Ethereum, I think, offers the better risk reward over the medium to long term return than Bitcoin. So if all of this wasn't bad enough for Bitcoin, it also carries this additional risk that we should briefly touch on, and that risk is that Bitcoin uses proof of work as a consensus mechanism, whereas Ethereum, through its upgrade 2.0, will be moving from proof of work to proof of stake. Now, I'm not going to unpack the difference between proof of work and proof of stake in this video, but all you need to know is that proof of work uses loads of energy and proof of stake uses hardly any. This is a problem for Bitcoin because it's got this reputation of being an energy hog. Now, people or proponents of Bitcoin would go like, but it's kind of using loads of green energy, and the dirty energy that it is using is in China and it's been banned from there, and it's going to be all right, and it's going to help speed the adoption of green energy. So they're saying that it's a FUD narrative. Maybe it is, maybe there's an element of that, I don't know. The point is, I don't think it really matters, and I'll tell you why it doesn't matter. Because if you've got two choices between something that's an energy hog and something that's not, and they both offer the same amount of risk reward or return on investment, why would you take the chance on something that is potentially an energy problem over something that's not? This is a really important point that doesn't really get discussed. And it's important for the following reasons, because one of the great investment or theses of why Bitcoin will kind of go to the moon is that, and if you listen to all these people like Cathie Wood and Michael Saylor and all those proponents of Bitcoin, they'll say that, well, yeah, look, institutions and businesses need a hedge against inflation. So what they propose they're going to do is they're going to invest in Bitcoin to hedge against that inflation. So they're all going to use some of the cash that they hold on their balance sheet and they're going to invest it in Bitcoin. And this is going to drive the price of Bitcoin up, is the idea. And that's why you see some of these predictions of like if every business holds a certain percentage of their cash on their balance sheet in Bitcoin, it'll drive the price to like 500,000 or even above that. But here's the problem with that whole idea. If you're in a business or an institution and you've got a choice of hedging against inflation, and your choices are Bitcoin on one hand, which uses loads and loads of energy, or Ethereum, which uses hardly any energy, and if they're both good hedges against inflation, and if actually Ethereum starts to outperform Bitcoin on price, then why would you take the risk of owning Bitcoin, which uses loads of energy, over owning Ethereum? Because institutions, at the end of the day, they've got shareholders, they're probably selling a product to customers, and if those shareholders and customers are like, oh, actually, Bitcoin, isn't that the energy intensive one? Regardless of whether it's a FUD narrative or not, doesn't matter, as long as there's a big percentage of people that are kind of concerned about it, why would you, as an institution, take the risk of adding that narrative to your balance sheet that we might be consuming unnecessary energy over Ethereum, which doesn't use any and is a better performer? And not only that, it's not only just a speculative asset, it also has this massive utility supporting it up. It's just, in my mind, it's just a no-brainer. You wouldn't, if you're an institution, you wouldn't put your money into Bitcoin, you'd put your money into Ethereum. So just in my mind, it's just an additional risk that I don't think people have really thought about. So that's basically the end of the video in a nutshell. Just to be completely transparent, I do own both a little bit of Bitcoin and a lot of Ethereum. I am heavily skewed towards Ethereum, and the little Bitcoin I do have, I may look to exit at the end of the current bull cycle, which will probably happen towards the end of the year. So I hope you found that useful. It will be interesting to see if my prediction plays out. But I think you can all see that there's some risks with Bitcoin that are not really talked about at the moment. And so hopefully you're more educated and entertained for this video. Please subscribe, and I'll see you all next time.